You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon, welcome back. Today is Thursday, 22nd day of May, 2025. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Excuse me. We do 2 live broadcasts every trading day. The first one, that's our live training room. That's reserved for members only and those who are taking their 1-week free trial. If you have not yet taken your 1-week free trial, go here to mytradingiq.com. And at the top of the page, there's a big purple button. You cannot miss it. Click it, fill out the form, submit it. We'll get your indicators up and indicating today. And then you'll get 5 consecutive trading days on the trial. Now we have a weekend coming up, and we have a holiday on Monday. So basically, if you sign up today, you're going to be covered all the way through the end of next week. So don't let that hold you back. Weekends and holidays don't count against your free trial. And it is free. There's no credit card required. We want you focused on what's being taught so that you can pay attention to that, not worry about money. Because at the end of the 5 days, we want you to be able to make a well-informed, intelligent decision as to whether or not trading is right for you. Now, when the live training room ends each day at 11:30 a.m. Eastern, we take a 30-minute break and come back for this broadcast, the afternoon broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. There's 2 different ways to join the afternoon broadcast live. The best way, because you only have to do it once, is go back to mytradingiq.com, scroll down the page to where it says noon broadcast. Click that link, fill out that 30-second registration form, and you're done. What will happen going forward is every trading day, you'll get an email about an hour before the broadcast starts. This broadcast. In that email, there's a link. So at 12 noon Eastern, all you have to do is click the link in the email. It will automatically log you into our platform. The benefit there is you'll have access to the question box, so you can ask questions and participate in the discussion. Of course, there'll be days when you're out of the office, away from the desktop, maybe even on vacation, but you still want to join live. You can. And some days you'll be busy. You can't join live, but you want to get caught up later. You can do both of those via our YouTube channel, which is easy to remember. youtube.com/CFRN. Not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, simulcasting, but we also archive each and every daily broadcast. Currently, there's over 2,800 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 days, 6 weeks, 6 months, 6 years, even more. Now, obviously, you're not going to watch them all, nor do you need to. But it's a great resource to have at your fingertips, and it lets you know we've actually been around a minute, which in this industry is sometimes unusual. youtube.com/CFRN. This is the schedule for each afternoon broadcast. At the top of the hour, Michael will join us and give us a recap of what happened in the live trading room this morning. Then we'll do some live trading on the TradingView platform for about half an hour. And then I'll wrap things up with our good word for the day. But we'll start, as we do each day, with our daily devotional. And we began a new topic yesterday. At his feet, choosing what's best in a busy world. Today's scripture is Luke 10, verses 38 through 42. And I'll be sharing it with you from the Message translation. As they continued their travel, Jesus entered a village. A woman by the name of Martha welcomed him and made him feel quite at home. She had a sister, Mary, who sat before the Master, hanging on every word he said. But Martha was pulled away by all she had to do in the kitchen. Later she stepped in, interrupting them. "Master, don't you care that my sister has abandoned the kitchen to me? Tell her to lend me a hand." The Master said, "Martha, dear Martha, you're fussing far too much and getting yourself worked up over nothing. One thing only is essential, and Mary has chosen it. It's the main course and won't be taken from her." Luke 10, verses 38 through 42. So day 2, what is best? Jesus saying these words to Martha after she's been rushing around trying to get the house ready for him always used to rub me the wrong way. I used to find myself thinking, well, it's all very well to say that the best thing is just to sit at your feet, but I don't know how I can do that when there's so much to do. The truth is, I still find myself thinking like that a lot of the time. But regardless of what emotions get stirred as we read these words from Jesus, it's so vital that we pay attention. When met face to face with Jesus, Mary chose worship and Martha chose worry. Where do we find ourselves at those moments during the day when we just need to hear from him? But we also have hundreds of things to fit in. Does the to-do list get the domain? I'm guilty. It often does for me. The truth is, in order for us to understand what it is that Jesus is saying here, we must understand him. We know that we can't fully know all there is to know about him now, but we also know that we can at least endeavor to understand and grow more as we study his word and his work. Jesus was talking about attitudes of the heart. He was making it clear that good deed after good deed wasn't in any way the same as just sitting at his feet. in worship and wonder. He wasn't saying that we won't have earthly responsibilities, of course. And we'll talk more about that on day 5. But he also wasn't saying that they come first. What comes first is always him. What comes first is always sitting at his feet before we rise to our own and get on with the duties of the day. However, our own perspectives won't always make this easy to understand. With the wrong frame of mind and heart, we can quite frankly find ourselves frustrated with this sort of talk. This is why making that all-important space to sit at his feet is so vital. And here's something you might want to put in your journal today. How do you unbusy yourself enough in your day in order to make space to hear God speak to you? Give that some thought. And let's pray. Heavenly Father, teach us to choose what is better. Time at your feet, listening to your word. In the busyness of life, quiet our hearts like Mary's, so we don't miss the peace found in your presence. Help us not to be distracted, but devoted. It's in Jesus' name we believe and pray. And everybody said, Amen. Amen. And happy Thursday. Hope it's a happy Thursday for you, whoever you are, wherever you are. Let me give you the numbers from around the world. We'll start here in the U.S. with cash markets, or the indices as they're called. Currently the Dow is up 114 points. The Nasdaq's up 146. S&P 500 is up 16. And the Russell 2000 is basically flatlined. In the commodity baskets, crude oil down 81 cents. I'll explain why in a bit. Trading 60.76 last. That's a drop of almost 1.5%, or $830 per contract traded. Gold down $19.80, trading $32.94.70 last. Silver down 46 cents, trading $33.18 last. That's a drop of almost 1.5%. In the Asian markets at the close, the Nikkei fell 313 points, almost 1%. The Shanghai dropped 7. The Hang Seng fell 283, almost 1.25%. And in the European markets at the close, FTSE down 47, the DAX down 123, the CAC down 46. So we had a red day in Asia. It was a red day for the UK. And at the moment, the Russell is now up almost 1 point. So since they're all green, I gotta say it, it's a green Radio Thursday here in the US of A for the moment. I'm just not convinced about this rally. But, hey, I've been wrong before, right? True that. Okay, to the news. The Department of Justice's Civil Rights Division is dismissing pending settlements and dropping investigations into several U.S. police departments. The move comes days before the 5th anniversary of the death of George Floyd, whose killing by a police officer triggered widespread Black Lives Matter protest in 2020 and calls for reform. Following the killings of Floyd and Breonna Taylor, the Biden administration's DOJ launched probes into Minneapolis and Louisville, finding patterns of misconduct concerning the civil rights of black people. The investigation prompted police reform agreements known as consent decrees with the two cities intended to rectify civil rights violations with reforms overseen by a court-appointed monitor. The head of the division said yesterday the decrees were unjustified and would have led to micromanagement. The news comes as an estimated 250 of the division's attorneys, roughly 70%, are leaving the department in response to these changes. Don't let the door hit you on the way out. And here's Johnny. OpenAI purchased Johnny Ive's hardware startup IO, the company announced yesterday. This is an all-equity deal valued at $6.4 billion and will involve the development of AI-powered hardware devices, the first of which will be unveiled next year. Now, if you don't know who Johnny Ive is, when you think of the iPhone, you think of Steve Jobs, okay? And yes, Steve Jobs was the primary force behind it, its features, functions, everything. But the design itself, that's Johnny Ive. If you've never read the self-autobiography of Steve Jobs, you should download the audiobook. It'll take you 24 hours to listen to it, and it will forever change who you think the man Steve Jobs was. He did this as he knew he was dying. He hired a ghostwriter to help him write it, but he wanted everyone to know the truth, that he was not a saint, that he was not perfect, that he made many mistakes. He just wanted people to know the truth. I don't believe he ever really apologizes for any of it. He just wanted people to know the truth. So whether you buy the hardcover book or you go online and get it, it's the autobiography, the self-autobiography of Steve Jobs. I'm trying to think of the guy's name that actually published it. It's George something, I think, but anyway, you'll find it. Now, if you're a little heavy the last time you stepped on the scales, this should be of interest. Eliminating a single amino acid caused mice to lose 30% of their body weight in 1 week. This amino acid is called cysteine, C-Y-S-T-E-I-N-E, and it's found in nearly all foods, with the study showcasing its critical role in metabolic processes. Researchers fed adult mice a cysteine-free diet and genetically engineered the mice to be incapable of producing the amino acid. The combined interventions interrupted cells' ability to produce the energy-carrying molecule adenosine triphosphate. The interventions also triggered 2 separate stress responses, a phenomenon previously seen only in cancer cells. The mice burned fat rapidly in a failed effort to produce energy. The elimination of cysteine outperformed any of the 9 essential amino acids in achieving rapid weight loss. Cysteine is present in all fruits, vegetables, and meat, making a cysteine-free diet kind of impractical for humans. Fruits and vegetables have lower levels of cysteine's precursor, methionine, whose restriction has been associated with various health benefits. So while this sounds like really great news, I want to caution you because somebody's going to come out with a drug here pretty quick now that they've discovered this. And I don't think whether you're a mice or a full-grown man or woman, losing 30% of your body weight in 1 week, somehow that just doesn't seem healthy. So just remember you heard it here first, but you're going to be hearing a lot about it in the future. Cysteine. On to Wall Street. The House of Representatives today approved President Trump's big, beautiful bill and moved it a key step closer to becoming law, sending the legislation to the Senate after a harried week of last-minute changes and 2 tense all-night debates. In the end, House Speaker Mike Johnson muscled through the more than 1,000-page package of tax cuts, trims to the government's social safety net, whatever that is, and new Washington spending on the narrowest of votes. This is how close it was, 215 to 214. Republicans, Warren Davidson of Ohio and Thomas Massie of Kentucky joined all Democrats in opposing the measure. GOP Representative Andy Harris of Maryland simply voted present. You know what? If you don't have the stones to vote, you don't belong in Congress. That's just my opinion. Johnson quipped Monday, just before the final vote that came a little before 7 a.m. Eastern. It's quite literally morning in America. Trump followed up after passage by calling it arguably the most significant piece of legislation that will ever be signed, and asking the Senate to approve it quickly. The final push for the package began on Wednesday morning with the release of a 42-page manager's amendment that offered a series of changes, most notably a more generous deduction for state and local taxes, as well as more stringent work requirements for the Medicaid program. The plan will also raise the nation's debt ceiling by $4 trillion after Treasury Secretary Scott Bessent warned America's borrowing authority is at the warning track and could be exhausted by August. Now, let's see what the Senate does. It's not done till that lady sings. You know who I'm talking about. I can't say that over the air. The U.S. dollar under pressure as global investors grow increasingly wary of America's fiscal trajectory. Once seen as a reliable safe haven, the greenback is now facing renewed skepticism, with strategists telling Yahoo Finance that capital is shifting towards undervalued currencies in Europe and Asia amid expectations of foreign stimulus and more attractive valuations abroad. The U.S. dollar index, which tracks the dollar's value against a basket of major currencies, including the euro, the yen, the British pound, the Canadian dollar, Swedish krona, and Swedish franc, has dropped more than 8% since the start of the year, underperforming every other G10 currency. It ranks as one of the worst performing asset classes of the year, alongside Brent crude. Since April, the index has dipped below the crucial technical and psychological level of 100, hitting lows not seen since 2022. At the moment, it's at 99.90. So, there you go. The EU has presented a fresh trade proposal to the U.S. as it tries to revive stalled talks with President Trump's administration. The offer includes phased tariff cuts on non-sensitive goods, plus cooperation in energy, AI, and digital infrastructure. The EU is readying some $108 billion in retaliatory tariffs if the talks fail. To sweeten the deal, the EU officials are also willing to extend a 2020 tariff-free arrangement on U.S. lobster imports. Now, how many middle-class Americans eat lobster? Come on. That pact, which expires in July, helped boost U.S. exports to the bloc and could form part of a broader trade package. Meanwhile, the U.S.-China trade truce looks shaky as both sides clash days after pausing steep tariffs. Good look at that. Shares of U.S. solar companies fell sharply today after the House of Representatives advanced President Donald Trump's sweeping tax and spending bill, which may end numerous green energy subsidies that have supported the renewable energy sector. Oh God, let this green scam end. Sunrun led the market rout with shares falling nearly 41% in early morning trade. SolarEdge Technology slid nearly 26%. Enphase Energy was down 17.7%, and Complete Solaria fell over 15%. If I were you, I would look at some cheap puts on those stocks. But that's not investment advice. It's just something you should talk to your investment advisor about. Maxion Solar fell 9%. Emini Group was down 5.2%. Jinko Solar dipped 4.7%. While First Solar and Canadian Solar dropped 5.4% and 6.4% respectively. Bond market jitters are back, and this time it's not just about inflation. The 30-year Treasury yield is now trading at its highest level since 2007, climbing above 5.1% following a very weak Treasury auction and renewed fiscal concerns. The latest leg higher came early today after the House approved the sweeping tax reform package, reigniting investor anxiety over the country's worsening fiscal trajectory. The jump in long-term yields builds on momentum from earlier in the week after Moody's, let me just call them Moody's. I have other words for them, but after Moody's downgraded its U.S. credit rating, citing rising deficits and political gridlock. U.S. existing home sales unexpectedly fell in April, despite a temporary drop in mortgage rates and increased supply, and could remain lackluster this year until Jerome gets off his backside and lowers the rates. You know, you don't have to be an economist to figure this out. You think you got a fragile economy? Raising rates or not lowering rates? I'm telling you, that ain't how you fix it. And I'm no economist. I need a calculator for most things. The market's rapid bounce back to near record highs over the past month has not been kind to investors betting against U.S. stocks. From the market bottom on April 8th through May 20th, short sellers have lost more than $250 billion. All of the Magnificent Seven stocks were among the top 20 names on which short investors lost the most money. Shorts on Nvidia and Tesla lost more than $19 billion combined during the period. And last, oil declined for a third day as U.S. stockpiles gained, and OPEC members discussed another supersized production increase for July, just as demand faces headwinds from the U.S.-led trade war. So there's the news. Let's bring it home. Look at our own news. Logic 247 is our 24/7 around-the-clock E-mini alert service. It's not just E-minis, it's also crude, gold, and silver. And I didn't format this right, did I? Obviously not. So there, now it's fixed. Now, we're currently in week 355 of Logic 247. Over the last 355 weeks, we've issued over 19,600 individual handcrafted alerts. And what we've averaged on a weekly basis is 20% or less being stopped out based on market structure and a simple process we teach all of our passport holders. Now, Valerie did the recap this morning at 6:15 a.m. Eastern. She'll update it this afternoon, early evening, before the members-only workshop at 8 p.m. Eastern tonight. Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued a total of 47 alerts, 2 never triggered, still waiting on the outcome of 12. That gives us 33 actionable alerts, of which 4 or 12% would have been stopped out, again based on market structure and the simple process we teach all of our passport holders. Now, every logic alert has an entry price, an initial target designed to help you get your goal for the day, and usually additional targets and then a final trade to target. Yes, you can trade them, but please use them for the reason intended. They will help you learn how to read a chart. If you're going to be a lawyer, you got to be able to read case law. If you're going to be a doctor, you got to be able to read the medical journals. If you're going to be a trader, you got to learn how to read a chart. Now, those case laws and medical journals, those are words and sentences and paragraphs and all of that. But reading a chart is a completely different art. And there is an art to it. There's some science and some art. It's a blend. But you want to get to the point where you can look at any market and instinctively know what the next high probability move is. You need to be able to spot where potential resistance is, where potential support is. In doing so, you unveil the possible windows of opportunity that exist between those two very important points. Now, we're approaching the big 20,000 round number. I think tonight or tomorrow I'll publish alert number 19,700, which means there's 300 more alerts coming. And everybody says, well, what are you going to do after you hit 20,000? I don't know. Quite frankly, I never thought I would do it this long. I mean, 355 weeks. What is that, 6 years? I'll do something. I'm just not sure what. So make sure you use this opportunity to learn how to read a chart. If you want to become a trader, you got to learn how to read a chart. Now, the logic alerts come out anytime around the clock. Futures trade around the clock. We have traders around the globe. Our day session is their night session, and vice versa. Our original alert service, however, is different. And the first major difference is they don't come out around the clock. They are published shortly before the Globex Open, or at least I try to publish them 5 minutes. See, we're in the Thursday session, but the Thursday session began last night at 6 p.m. Eastern. So these came out at 5:55 p.m., 5 minutes ahead of the open. All of our members and all of our trial members had all of these targets. the ES, the S&P 500, the Dow, the Russell, crude oil, the NQ, gold, and silver. Okay? So as we go through the charts, just remember, you're going to see some lines that say long target, and you're going to see some lines that say short target. All members, all trial members, had these numbers 5 minutes before the market opened, not after. Okay, so with that, we can now giddy up to the charts. And we'll start where we always do, with the big beautiful S&P 500 Emini futures. Just when I thought I was going to get my pull back to the BBC, which is so long overdue, and I think we're still going to get it. This little doji, it's been a little red today. It's had no color. Now it's got some green to it. But even if we were to rally, we've got potential resistance overhead at the black step line, and then it balloon climbing. So my thoughts are, whatever happens today, by Sunday night, we'll be back to the BBC. Now the green line, it's called the BBC because it stands for Bull Bear Cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. Above the green line, higher prices. You'll also notice that when price pulls back to the BBC, like it did there, or like it did here, here, the pullback holds more often than it doesn't. But eventually, we know it will trade through. Like it did here, leading to this, and like it did here, leading to this. Price always reverts to the mean. Always. And in our case, the mean is green, and we call it the BBC. Okay? So whether it's today, tomorrow, Sunday, maybe not, Sunday night's going to be an odd night. Global markets will be open. And futures will actually trade up until noon on Monday. But we won't be here. It's going to be a holiday. So actually it'll be Tuesday. I'll be here tomorrow, but we'll see where we are on Tuesday at this time during the broadcast. And we'll talk about what happened in between, of course. The markets normally don't move too much when there's a U.S. holiday. We're the only ones who celebrate Memorial Day. So the other markets will be doing their thing as normal. And futures will be doing their thing. So now this is a daily chart. You're thinking, I don't trade a daily chart. What good is this? I'll tell you. Institutional traders, those deep pockets that move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. It has everything to do with account size. So I encourage you, whether you trade futures, stocks, crypto, Forex, ETFs, spend 2 minutes with the daily chart of whatever you're going to trade before you start trading on your smaller time frame. You're getting a free look over the shoulder of the deep pockets that move price. And as you can see today, they're very undecided. Do they buy? Do they sell? Well, they've done a little buying. They've done a little selling. And here we are, stuck in the middle with you. You also are able to identify important inflection points in the market. Like when you're looking at your range chart, you don't know that the daily BBC is down here at 57.67. You don't know that the step line, which is overhead resistance, is at 59.22. So you're doing two things. You're seeing what the deep pockets are doing, and you're identifying major areas of potential support or resistance. Okay. All alerts are created on the 30-minute chart. Nothing magic about 30 minutes, just the time frame I chose years ago. And if it's not broke, they say, leave it alone. So I do. The vertical lines you see separate today, Thursday, from Wednesday. Back here's Tuesday. Okay. And the horizontal lines are the weekly trading zones, which are published every Monday morning, 6:15 a.m. Eastern, for the last 15 and almost a half years. We're closing in on 15 and a half years of the weekly trading zones. Now, when price rallies up to a zone, we expect resistance. When it drops to a zone, we expect support until proven otherwise. I've had a number of our traders tell me that the weekly trading zones are one of the most important parts of their personal trading arsenal. So, over time, you'll find out how meaningful it is to you. So, this was the opening candle last night. And remember, these targets were published 5 minutes before the open. We came out with price trapped. We got resistance overhead, the BBC, support below. Once red and falling gets below price, it becomes potential support because it's probably on its way to becoming blue and climbing. So we spent hours consolidating below the BBC. Then blue and climbing turned to red and falling, and we got a drop right to the short target. Now when the market finds support, it's going to go look for resistance. We spiked the BBC, but the pullback held, and then we hit right here where red and falling turned to blue and climbing. That became support, and we put in a higher high. But this high failed to take out this high. So there's still weakness, and as you can see, we're printing a red candle. Now with blue and climbing below us, I want to say that that's telling me markets are going higher today, but there's something in the air. I think Stefan mentioned it this morning in the discussion group. He called it a potential polar shift. This little up move we have right here, this could be nothing more than a head fake. So be careful with your trades on the upside. The Dow, pretty much a carbon copy of the ES. Price trapped, boom, pullback holds, the pullback holds, and down we go to the short target. We find support here, and if you look left on your chart, you'll find out why. That bounced us back to the BBC. We got rejected. Then we got above it. But you see, these two candles were still touching the BBC. So that means it's holding. But now we had a candle that opened and closed above the BBC. So now we can say the pullback did not hold. In fact, what we're waiting for now is for price to come back to the BBC, because you got support times 2 right here. We might find support here at the step line, but there's support times 2 right here. So we did hit the short target. I guess we'll leave it at that. Russell, again, almost a carbon copy. Up to the BBC, the pullback held, sent us down to the short target. Market found support. If you take the time to go look left, you'll see why. That bounced us up to the BBC, which sent us back to the zone, support. Back to the BBC, we finally got above it, opened and closed above it. Now what's happening? We're getting now this high. Look at this high. And look at all these highs across here. When you see wicks like that to the upside, you should expect lower prices. So we'll see if this pullback to the BBC holds like all of these did, or if it trades through. Now, if it trades through, it's got to overcome blue and climbing. So there may be a little bit of tug of war there. The NQ, this is where we opened last night. Again, trapped. Consolidation at the BBC. This candle reached up and touched the zone. Then blue and climbing turned to red and falling, and kaboom, right down to the short target. Support always sends the market looking for resistance, and it found it at the long target. Resistance. There's a zone right there, but you see the long target is based off that bearish cross. When the red line gets below the green line and leads to an extended move, the first time price revisits that area will almost always be good resistance. Same is true of a bullish cross, just in the opposite direction. See this bullish cross right here? See this low right here? Same concept. So look what's happening. We got a double top here at the zone and the target. Price is pulling back to the zone, potential support, blue and climbing potential support, BBC potential support. If we get below the BBC, then you got support here potentially, and here. I just got a feeling we're going to close lower today. But that's just a feeling, okay? And you don't trade based on feelings. We're technical traders. Fundamental traders, they think about it. We just know how markets work and how price flows, and that's what we base our trades upon. Crude oil. This was the open last night. Ran up to the BBC, actually touched the zone, which we expect to be resistance, till proven otherwise, and it was. And it pushed us all the way down to the short target and to the zone. The low here was 60.37. The zone is 60.30/35, so we missed the zone by 2 ticks. Support sent us to resistance at the zone in red and falling, which pushed us all the way down to the zone. Now remember, these are the zones that were published Monday morning at 6:15 a.m. Eastern. Once the zones are published, they're carved in stone for the entire week. They don't change in any way whatsoever. So support sends us to resistance, back to support, back to resistance. If crude continues higher, and there's a lot of fundamental reasons why it shouldn't, but if it does, okay, you see this bearish cross right here where the red line gets below the green line? That will most likely be good resistance, at least the first time up. So could you trade 61.30? No, there's not enough room. 61.25 to 61.35. Yeah, I'm not crazy about it. I'd go look for something else to trade. Gold. This was the opening candle last night. Took us all the way up to the long target. And then, if you look left, you'll see what happened. Blue and climbing rolled over to red and falling. Took us all the way down to the short target. Again, all of our members, all of our trial members had these targets 5 minutes before the market opened. And so we punched through, but this window that I drew days ago still hasn't filled. But it probably will at some point. We're coming up against potential resistance at the BBC. And if that gives us another leg to the downside, based upon the news that I just read you a few minutes ago, we could very well fill this window today. And last but not least, silver. Here's where we open. And we just made a beat. Well, actually we didn't make a beeline. We went a leg and a retracement. And then a leg that took us right to the target. Looks like we overcame it by a tick. With silver, you only need 2 pennies to get your goal for the day. Okay? So we hit the long target, resistance. So now the market's going to go look for support. Well, it tarried a moment at the BBC, and then it dropped along with red and falling right down to the short target, then down to the zone, and then all the way down to the next zone. Support sent us to resistance at the BBC. You see how the pullback held? Now we're in an odd situation. We got blue and climbing, which is support, and we've got resistance times 2 right here. Remember, when price pulls up to the BBC, we expect resistance like this until proven otherwise. When price pulls up to a zone, we expect resistance until proven otherwise. Yet we've got this blue and climbing here. So again, silver can be an incredible market to trade, but if you're a relatively new trader, you might want to wait a minute, trade something a little simpler. Doesn't have as high of margins and all that kind of stuff. Okay. All right. Michael should be here momentarily. We're back to just basically a doji on the day. So the deep pockets still aren't sure what they want to do. To become a member and be in the members only workshop tonight, go to mytradingiq.com, watch the videos, read the content if you haven't already, and then send an email to support@cfrn.net. In that email, tell us you want to become a member. We'll immediately send you an email that explains everything about becoming a passport holder. And there'll even be a link that you can click to seal the deal. And then you'll get an invitation to the members only workshop tonight. As a passport holder, you get 2 hours of live interactive training every trading day. Real trades, real money, in real time. While you ask every question that pops into your head and trade along in your demo account until you qualify to go live. Now, this isn't for a week, this isn't for a month. It's lifetime. My life or yours, whichever ends first, I guess. On top of the group training, 2 hours every trading day, you get private one-on-one mentoring. All you got to do is ask. The strategy you learn, the indicators you own as a passport holder are fluid across all markets and all time frames. Stocks, futures, crypto, Forex, ETF, it doesn't matter. Price flows the same across all markets and all time frames. From support to resistance, back to support, back to resistance, over and over again and again. It's a never-ending cycle. As a passport holder, you'll get the Logic 247 alerts around the clock. You'll get the concierge trade alerts the second they're posted each evening. Monday morning, 6:15 a.m. Eastern, you'll get the weekly trading zones. And again, once they're published Monday morning, they're carved in stone for the entire week. They don't change in any way whatsoever. Of course, you'll be able to attend the members only workshop tonight at 8 p.m. Eastern and every Thursday night at 8 p.m. Eastern. Plus, you're going to get the golden key that unlocks all of the private channels in Telegram. One of those private channels is the members only workshop channel, where there's hundreds of previous workshops. Do you need to watch them all? No. But Valerie puts a caption under the video about the main points we discussed on any given Thursday night. So you can pick and choose which ones are relevant to you that might help you solve whatever issue you're having. But of course, at any time, you can request private one-on-one mentoring. Honestly, it's everything a trader needs, all under one roof, one low price. Now, CFRN was launched in 2005, but our current format with the live training room and all of this since 2008. So, like I said, we've been around a minute or two. So to get started, send an email to support@cfrn.net. Just say, I want to become a member, and we'll make sure you get into that members only workshop tonight at 8 p.m. Eastern. Okay, Mr. Michael should be here in just a second, so stand by. Let me see if he's having trouble logging in. So don't go away. We're just getting started. There's
Okay,
Boo Boo.
here I am. Here I am.
I
Sorry.
actually got done with it. Today's the first day I've had coffee in over a week, and I didn't realize I was running at 100 miles an hour until I got
Okay.
everything finished. And so,
So you started late, finished early?
no, actually, I started on time.
Oh, did you? Okay, good.
Yep, started on time and got everything covered.
Yeah, sorry, I was outside. I replaced all the components on the inside of one of my grills outside.
Uh-huh.
I didn't realize you could do that. But
I didn't either.
it's like a brand new grill now.
Cool.
And
Your charts look
yes.
good.
All right, excellent. Here we go. Let me bring this up. Here it is. All right. Good afternoon, everyone. Today is Thursday, the day of May 2025. Now, if you have not taken a free trial with us and you want to, go here to mytradingIQ.com, click on the purple button right here. There's no credit card required for the trial. Just click on that purple button and it will bring you to, well, this page. All right. And on this page, all that we ask for is your name, your email, your phone number down here at the bottom. Gives you a TradingView login ID, or gives you TradingView login ID. If you don't have one, click on this link right here and get one. Hit the register button. Once you hit that register button, we will be sent an email that lets us know that you did that, and we will send you everything you need to get into the room in the morning. We'll enable the tools for you and get you ready to go. Now, today we were up at $1,100 at one point, probably even a little better than that at one point, but we stopped out on the NQ. Our last trade on the NQ was a stop out. So anyway, if you're going to read the spreadsheet, you can read all the CPC risk disclosures down at the bottom. Today's the 22nd day of May. As I said, we're up 32 ticks on the NQ, 63 on the Russell, 65 on gold, and minus 16 on the ES. That put us at 925 on the morning. Okay, today took 5 minutes and just one trade to get to $1,100, which was the goal for the day. The goal is actually $100 per contract, but we had 10 contracts on. And that was actually a 26 tick trade on the Russell, is what that ended up being. 22 tick trade, sorry, 22 tick trade on the Russell. And we took a total of 25 trades this morning. So on the month now, we're at $15,882 over 14 business days, averaging $1,134 per contract per 2-hour business day. On the year, now we're at $135,700 over 86 business days, averaging $1,577 per contract per 2-hour business day. If you're doing the 24/20 blueprint, which means you quit trading when you get the goal for the day, and you add one contract for every $2,000 that you earn, like right now, I would be adding another contract tomorrow because we're at $10,000 per contract so far. But I'm just doing it one per month, right? But right now, we would have the next 6 days of trading. I think we have left this month, right? Is that right? Tomorrow and 5 days of trading we have left this month. Next 5 days of trading I would be doing with 6 contracts, but we're just going to stick with 5 until the end of the month. If you had one contract per month, so far this year, you would only had to work 11.16 hours, and you would have averaged $3,763 per hour. All right. Now, hang on. Okay. Yeah, that's it, right? So that was how you take the trial, and that's how you get to the spreadsheet. Sorry, I just got distracted. Squirrel. All right, so we'll get into the trades that we took. Well, we'll just start with the left and go to the right. All right, we'll start out with gold and work our way across, like we normally do. In the gold. All right. In the gold. Our very first trade here on gold, we picked up 10 ticks on that one. All right, and then the next trade that we took was a ways away from there, it looks like. Over here, we had a break even. I thought I had a lot of trades on gold, but there are a bunch of break evens. We had another break even right there. We picked up 20 ticks on this one to get us to plus 30. 20 ticks, I thought we actually got 25 on that, but I wrote down 20. So we got 20 ticks on that to get us to 30. Then we had another break even. Then we picked up on this one. Oh, this was when we got 25 ticks on. Okay, or 30 ticks. I got 30 ticks on this. It got me to 45. There's something missing in here because that does not look like a trade that would have got me to 45 ticks. That actually looks like one that would have stopped me out. And we did get a stop out there. We went from 40 on, this is gold, right? We went on gold, we went from 15 up to 45, then 45 to 55, then 55 to 65. And I have this stop out in here that does not seem like I registered. Is this even gold that we're looking at? Huh. All right. Well, there's a lot more trades in here than I had written down. There's one stop out and a bunch of really good trades there at the end that I took. Anyway, on the gold, I wrote down that we ended up with 65, but I think we ended up with a lot better than 65. I can go and check, but that will take some time. Just do the trades that I did in the morning session. All right, so let's get to the Russell now. The Russell should be much easier to figure out because on the Russell, we only have these 4 trades. The first one right here, this is where we got the goal for the day on this trade right here. We got 22 ticks on that one. Right, and then we got 4 ticks there to get us to 26. Then we got 10 ticks to get us to 36. Then 2 ticks to get us to 38. And then over here, we got whatever it took. I guess it looks like 25 ticks to get us up to 63 is what we got on that one. All right, 25 to get us to 63. Yeah, that's what we ended up with. Okay, and that is how we closed it out. We had one big move up here during the break and one big move down during the break, almost 100% retracement. From close to open, on that bar, it was 100% retracement. But that was it for the Russell. We ended up with 63 ticks on the Russell. Okay, 63. And the ES kind of had our number today. We got just about positive at one point on the ES, but we never made it all the way there. Let's get in here. I guess we did start out on the ES okay. Let's see. No, we didn't. This one right here was our first trade on the ES, and I messed this one up. I got minus 10 ticks on that one. That was a mistake. Then right there, I got 8 of it back. That got us to minus 2. Then I stopped out again. That was a good stop out. Put us to minus 12. Good stop out. I did everything right on that one. Then this one right here, I don't remember why I have that off-colored stop out on it. It was an aggressive stop out. I think that's probably why. It was an aggressive stop out, and that stopped me out again. So at that point, I was at minus 22. Then I had a break even there, aggressive short right there, got me 12 ticks, and that put us at minus 10. And I got 4 back right there, that put us at minus 6. And then I stopped out again over here, and that put us at minus 16. We got sideways here. We didn't do any more trading on the ES, and then we get into the break when the European markets closed, and there was some pretty nice leg lengths in here, some decent leg lengths in here. Just looking at the way that the price is working right here, it went up 50%. It went up 50%. It went up. That's more than 50% right there. Then it wiggled around a little bit in here. Okay, and it finally went up, and then it did 100%. And then it went up without a decent retracement. guess right here would have been the only retracement. That would not have been a place I wanted to trade. Went up again. Then you're looking at a different set right here. So this was a good 50% retracement for. It didn't come together that way because it gapped right here, but it would have been a good spot for an aggressive trade if it hadn't gapped. It ran all the way up and then 100% retracement. Okay, do you see what I'm looking at? When I'm doing this, does it make sense? I mean, it kind of goes with it, everything that I do in the morning session. Here is where it moved down to change directions right in here. So you've been using this leg length right here. That was not a deep enough pullback to really want to take a trade in there. Had this, and this was a good pullback right here, but you would have had this one right here first, which didn't give enough to, just gave enough to get the stop to break even. And then the next one would have gone down a little bit further, but all that would have ended up at a break even. Then you would have been working with this low up to this high. You could have shorted right there aggressively. That would have gotten you break even. Then you really didn't have much to work with in here after that. Okay, and that was the yes. We ended up with minus 16 on the yes. I really wanted to go into detail on that for you. All right, let's go all the way over here and here and here. All right, on the NQ right here. On the NQ, our first trade here on the NQ, we picked up 16 ticks. Then the next trade, somewhere over here, we picked up, it looks like 12 ticks to get us to 28. Then we picked up something pretty good, 28 ticks to get us up to 56. Then we had a break even. Then we had another trade in here somewhere that we went from 56 to 92. And then we stopped out. This was the last trade that we stopped out on right there, minus 60 ticks. That got us down to 32. And then we ended the trading on that one for the morning session. And that was it right there. All right. We had a nice move up right here that came all the way back down to here. This would have been a decent spot to trade it, even though it didn't really give you much. It would have been a decent spot to trade from. You might have even stopped out on that. But it would have been a good spot to trade from. Then you would have been working from here to here. So your retracement, you'd wanted it up to here. All right, all you got was this. It would have worked out if you'd have taken, not that one. Yeah, it wouldn't have worked out at all. You would have stopped out on that. Next, you had this leg length from here up to here. This would have been a good spot to aggressively short. Up to here, another good spot to aggressively short. Down to here, up to here, another good spot to aggressively short. Okay, so do you guys see why I'm saying the aggressively short right in there? I'm saying aggressively short because it's pulling back to the 50% retracement mark. At the close is at the 50% retracement mark right here. The open of the new bar is at 50%. The open of the new bar is at 50%. The open of the new bar is at 50%. Okay. So it's going down like this. Then retraces right there, 50%. You short again, it goes down like this. Then retraces right there, 50%. You short again, it goes down like this. Right there, 50%. You short again, down like this. If it went right here and got into the overbought right there, you'd short again. It's because it's getting into the overbought down here and here and here at the same point. It's getting to the 50% retracement on each one of those. Okay, so it's possible it could do the same thing right now. Right, I just wanted to point that out. Those have been 3 awesome trades right there. And this is the NQ, so you could have picked up a lot. It's 47 range. And you could have picked up 150 ticks right there, pretty easy. All right. So those are all the trades that we did this morning. Let me slide this over here like that, minimize it like that, and show you this. If you've not taken a free trial with us, go here to mytradingiq.com. Click on the purple button right there. There's no credit card required for the trial. Click on that purple button, and it's going to bring you to this registration page. On this page, all that we ask for is your name, your email, your phone number down here at the bottom. Down here at the bottom, gives you TradingView login ID. All right. All you have to do, keep getting distracted. All you have to do down here at the bottom is click on this link. If you don't have a TradingView login, click on this link right here. All right. When you click that link, it'll take you to this page. If you don't have TradingView at all, click on monthly, sign up for the essential, and you're gonna have to pay $7 a month for the live data feed. All right. You don't have to pay this up front. This is a 30-day trial. But you get an ID that you can use to get our stuff and start practicing with our stuff. Okay. So I really highly recommend you do that. Now, again, if you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button. There's no credit card required for the trial. Whew. All right, that's all done. Now we can start trading again. Did you guys see all this? I mean, I know I just drew this with the red line right here, but if I undo that and I draw everything else on it, will you see it any clearer? So they can up close on this bar will be right here. That's not going to be in the overbought. The next bar that closes up, depending how this bar comes together and the way the next bar comes together. Now this leg is a little shorter right here, so it's not going to be exactly right. But this one right there, 50%, right? And the next one was right there, 50%. And the next one was right there, 50%. And so this one would be kind of like that last one. Okay, so the up close of this bar is going to be really close to the 50% level, but now the legs are getting shorter. You see the legs down are getting shorter, so it's losing strength on the downside. All right. So like right there, you're pretty close to the 50% retracement, but you're not in the overbought. That's what happens when you get when it tightens up like this. So this probably isn't going to work out on a 50% level. It probably won't work out on a 100% level either. This is probably the end of it right here. For the decent looking trades, it might close up here and go sideways a little bit and get you something up here that might give you a down close at 100%, but it's not as good of a, not as attractive as it was to me. Appealing. God, I was having the hardest time saying those words this morning. It's not as appealing as it was to me a few minutes ago. Okay. This one, you're going from here down to here, right? From here down to here. So you want to trade from up here. This one right here, you're going just from here to here. All right. So if you gave a down close right now, that would be a pretty good spot to short that. And if I can find my DOM, I will do that on a down close. I will do that right now, and that's the ES. So I'm going to short it right here. Right, that's a pretty good spot for a short. And I actually didn't get a very good fill on that because it already moved down some. But it should make it down to the prior swing low, so it should give me enough to get the stop to break even. Okay, I should have been filling from here at 57.50 on minute 56.25. So I'm off by a whole 5 ticks. That's a horrible fill. It'll probably stop me out because of that. I should have been filled there, a better fill, and then had my stop at break even already locked in some profit. It should still work out and get us down to the swing low. That's what it should do. But with the NQ weakening, the legs down weakening on the NQ, it wouldn't surprise me if the ES starts to weaken a little bit right here too. Okay, it's going to have to make a flat spot down here in the oversold to make this trade work out for me. This was not a good place to trade here on the Russell. This is not a good place to trade here on the NQ. And I can't really tell about the gold. Gold you would have been looking at from here to here. This is, yeah, we did stop out on that ES. I was kind of expecting that because I had a horrible fill. From here to here, that was a good place to trade there on the gold. The problem was you couldn't trade from up here because the first one would have been down here and it didn't go anywhere, and you had to go the full cycle to pull back up. So right now what we're looking at is this right here. Okay, that's what you're looking at now. So we should have had a break even on that, right? And now it's gone full cycle, so it's right up here at the fib. Now, when it gets up really close to a fib like this, I like to crunch it up to see what it's doing in the bigger picture. Okay, is there a reason for it to drop from here? And there really isn't. Up here, there'd be a reason for it to drop, but right here, not really. So it's probably going to change direction here. It is. I know the YBR is going to flip. So from there, when the YBR flips, I remove that. When the YBR flips, you gotta be looking for it to get down to right about here to be tradable. Right in that area right there to be tradable. Okay. All right. So this retraced to a midpoint on something else that I drew. That's not the right place though. Let me just get rid of that. All right. So in here, you would have just been looking from here to here. All right. Well, the low from here. And you draw it from here to here. So that was what you were looking at. Now it's pulled all the way back up there, so it makes me want to pull back and see. And that's probably a pretty good spot for it to short from there on the bigger picture on the NQ. All right. If you crunch it up, it came up to here, it did a double top right there. It's not, I mean, it's not ideal, but you know, the best place for it to go from would have been right here. But anyway, we'll slide it over a little bit, crunch it down like that. And there we go. All right, let's see. Bob, if you use your Ninja platform, can you get that? I don't have any of this stuff on NinjaTrader, Bob. What is your question, Rob? Type it in. I am here to answer questions. That is my purpose right now. But Bob, we don't have this stuff down here on Ninja. The only thing we have on Ninja is the YBR. Okay. Yeah, you just asked the same question that Bob did. No, sorry, it's not going to happen in NinjaTrader. We have the YBR in NinjaTrader, but that's all. Not in here, Rob. But this is Trading IQ. But what you're looking for, I mean, in here you're looking for the same stuff. Basically, you just have different tools. Okay. All right, that is fine. The Trading IQ, you mean, Rob? Or the TV? Okay, Bob, you're talking about Trading IQ. Rob is okay. All right, I am confused. I have a Bob and a Rob, both asking me questions about NinjaTrader. And okay, Rob. Okay, Ravi. All right. Yeah, you're Bob, and the other one we'll call Ravi. Okay, instead of Rob, we'll call Ravi. So, Bob, we don't have. Well, for both of you, we don't have it on NinjaTrader. We don't have any of the TV trade stuff on NinjaTrader, and we don't have the Ultimate Slingshot on NinjaTrader either. Okay, so none of the stuff we have down here is on Ninja. The stuff that we have, on Ninja, I'll show you what. I don't have Ninja on this machine. Yeah, I can't save this because I'm logged in with the wrong ID. Let me log in with the right ID. Hang on. Sign out. And sign back in with the right ID. And then I can save this. Okay. The stuff that we have on Ninja looks like this. Okay, it's still loading. This is what the slingshot looks like. This is what the stuff on price looks like. That's what we have in NinjaTrader. And you see the YBRs on there and all that. We don't have the same stuff that we're looking at in here on NinjaTrader. Okay, all we have is the YBR that's similar. And I'm not planning on putting it on NinjaTrader. Okay. So, Ravi, when you said you're gonna sign up tomorrow, did you mean you're gonna sign up for this stuff, Trading IQ, tomorrow? Or you just signed up for the other one, didn't you? Was that you that just signed up for the other one? Yeah, I thought I saw that go through. And you sent me a message asking where the link to the live room is, right? Okay, the live room will be in the room in the morning.
Welcome.
Yes. Hang on. Let me just go, look at the emails in here. Because I don't think everything's all mixed up, Dwayne. At least I'm all mixed up. Okay.
Yeah, you can
Bob,
figure it out after you're done.
Yeah, I'm gonna figure it all out later. Anyway, we have 7 minutes left in here, and I will get in touch with both of you guys. Okay. Yes, there are a lot of hats going around. Okay. Okay. Then that is Trading IQ. That's the email that you got yesterday, and you had it last week too, I think. Beginning of last week, right, Ravi? And Bob, you are already a partner with Trading IQ, I believe, right? Pretty sure, aren't you?
At a Trump press conference, Elon was wearing 3 different baseball caps. And President Trump looked at him and says, "What's going on?" He goes, "Well, everybody keeps saying I wear a lot of hats, so I thought I should actually do it." So, I guess you had to be there. But anyway.
Well, it's appropriate.
It was in the Oval Office, I think.
Germane to the conversation. Okay, so Bob and Rob are friends. All right. Well, then you guys will work this all out. All right. We'll do it offline. Let me finish this session, and then I can talk to you guys.
Oh yeah, that's right. Like I just watched Goodfellas again for, I don't know, like a 3rd time. But yeah, we can call them friends. You know, our friend over there, and you know, how to speak the name so it doesn't get picked up on the wiretap. I'm just kidding. Guess you had to be there. Anyway. Oh, we are here.
Yeah, those antibiotics, you're there. You know what's funny? Speaking of the antibiotics.
No, that's the caffeine. But the antibiotics did a wonderful job, yeah.
Well, I mean, not only that, but they could be curing things you didn't know you had.
That's true.
That was like with Jada's dad. He's on antibiotics because we just had to have a toenail removed. And so he's on antibiotics, and it cured something else that he had going on. For sure, it cured something else that he had going on because there's some other positive difference. So
excellent.
Yes, antibiotics, good for the body. My son was on them too, I think, right now. All right, so we're looking for a pullback here on this one, right? We didn't take a trade from in here. That wasn't really a great spot to take a trade, but this could give us a down close on this bar or the next bar. And right, so Rob and Bob, let me just grab your information while it's right up here and easy to get. My computer must be rebooted again. Okay. Hey, that was pretty neat. Went right back to the last thing I had open. Okay. Okay, there. All right, so we're in the overbought over here on the gold. This is not a great place to take a trade from, but we are in the overbought. It's got a little bit of momentum going down. I'd rather see a deeper pullback there to give us an opportunity somewhere up here. Okay, somewhere right up in here would be a better spot to trade from. I don't see that happening, but that would be a better spot to trade from. Here on the The Russell, we have a very deep pullback. It's very near the YBR, and whenever it gets near the YBR, I like to crunch it up and see if there's another reason for that to happen from a bigger picture perspective. And there is a reason for it to go up even further, up to here. See, it's an inverted head and shoulder pattern. This kind of shoulder's all messed up, but this is one of them, and this is the other one right there. Okay, but it's not a trade setup right here, not yet. Over here on the ES, we really needed to pull back, a little bit deeper pullback. It came out of the oversold right here. That was an okay trade to take. It's not the best place to take a trade, but it worked out well. The gold over here, again, not the best place to take a trade, but it's a valid trade. It's just not a great place to take a trade. It's got very little room to get down to the swing low, but you only need 5 ticks to get that stop to break even on gold. Okay, and mine just hit 5 ticks, so I'm going to break even, and here it is. Stops at break even on that one. And we'll lock in 2, and we're in at 0.2, and we're out with 2. Over here, we just flipped the YBR here. So, gotta redraw this. Let's get rid of the old one. Gotta get rid of that one. And get rid of that one. And we'll redraw that like that, and we'll redraw. This is actually from right here. Okay. Now that it's done that. So if we get a down close on this bar right there, gosh, where is it? Here it is. Down close on this bar. See, I'm not getting a good fill here again on the ES. I should have been ready for that and had an order ready to go there at 74.25. Okay, I should have been ready for that and had an order to go there. They give you really great mids. All right. I can't take mids like that. I don't know. Well, I suppose I could if I really had to.
Me either. And they offered. But I said,
yeah,
I got to pass.
Yeah, I can't do things like that. You know, when I was in the hospital, when I was really sick and I was in the hospital, they gave it to me through an IV. And that really messed me up. So I didn't have a choice. I did actually rip the IVs out at one point, but then they strapped me down.
I'm sure that made everybody happy.
Yeah, I know. Yeah, I'm sure I had 6 of them.
How many days they leave you in that basement?
6 days I was in there. Well, 6 nights I was in there. It was right over Christmas, right up to New Year's. The 22nd to the 30th, I think, right? Something like that.
But looking over your shoulder, you can see that all things work together.
Oh yeah, I was gonna die if I just if they didn't do that. They said I had 3 days.
Yeah, that's God's good.
That's good, and I've come so far since then.
You really have. I mean, you're like a different person.
I was in a pretty tough place physically. I didn't feel that way, but I guess I was. Well, obviously, I say I don't feel that way, but I was throwing up blood all the time, and I guess I did feel that way. I just didn't recognize it.
Sometimes we don't want to recognize it, you know?
Yeah, it was a slow progression into just being awful. Anyway.
I think BTC hit 111 today.
Yeah, it did. It was at 111 this morning. It hit it actually last night, I think. Well, it was early this morning, I think. But anyway, it's 1:30. Okay. It's 1:30. It's time to wrap up already.
If you've been on the trial, guys, and you want to get in the members only workshop tonight, then you've got the information you need. And if you jump on it, we'll be able to get you out an invitation so that you're actually in the members only workshop tonight.
Yes. And Bob and Rob, do either one of you have a phone number so I can just call instead of trying to do it through emails and all that stuff? You can type it in here. The only people who can see it are me and Dwayne. I can call one or both of you guys before I wrap this up. Which one was that? Bob. Okay. Hang on. Let me write it down. Over here. Write it down so I can read it in a few minutes. 82865. Just kidding.
You know, my grandmother, Granny Reeves, had the worst handwriting of any. Well, she only went to the 2nd grade, but today my handwriting looks a lot like her handwriting. And quite often, once it gets cold, I can't even read it myself.
Yes.
I scribble stuff down, and then I go back in an hour later, and it's like, oh, crap, what does that say? Anyway.
All right. Well, I've got both your numbers now, so I'll give you a call in a few minutes here, okay? Now, for everybody else, if you haven't taken a free trial with us, go here to mytradingiq.com, click on the purple button right here. There's no credit card required for the trial. When you click on that, it's going to bring you to this registration page. We're going to have a new one of these tomorrow. Okay, but you have to click on this registration page, give us your first name, last name, your email, your phone number down here at the bottom. Make sure you give us a TradingView ID, okay? We really need that. And if you don't have one, click on this link and go get one. And that is it, guys. All right. With that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain America's largest city park. Dwayne, if you are ready.
I am.
Oh, yeah. Yeah, Bart. I remember that.
Okie doke. Recap of the morning session.
Today it took 5 minutes and one trade to get to $1,100 with 10 contracts on.
Great job.
Thank you.
All right, guys, we have covered all the markets. One last look at the daily chart. See that doji now has got a little bit of green body, but it's got 1, 2, 3 layers of potential resistance overhead. So be careful on the long side. You could be experiencing a little bit of a head fake right here. We'll know by the close. And real quick, we'll look at the ES again. Not on fire. The Dow. See how that blue and climbing took us back up? We've already gone through all of these, but I know some of you weren't. Now, all of these targets, our members and trial members had them 5 minutes before the open last night. In Q, we hit the short target and the long target twice. Crude oil, we hit the short target, and we got right here, look where the market found support, at the zone that was published Monday morning, 6:15 a.m. Eastern. And then where did it run resistance? At the zone, published Monday morning. 15.5 years. And what's changed with the zones? Absolutely nothing. Because they've served us very, very well. Gold, okay. Remember I said look for gold to potentially come through blue and climbing and possibly even take out the low of the session and fill this box that was drawn in probably back on this day, which would have been Tuesday, Thursday, Wednesday, Tuesday. Came close. Looked like we were going to do it this morning. Then the market ran back up. Now it looks like it wants to come back down. And silver's pinched. Resistance times 2 overhead. Support right below. So there's going to be a dogfight right here on silver. Got a feeling the bears are going to win the fight. But you could find support right here where red turned to blue. And then, of course, at the zone. And then, of course, at the low of the session. So there it is, all again. I've already explained all of this, how to become a member. So we're going to wrap it up with our good word for the day. Which is, always agree with God's word. The mouth speaks what the heart is full of. Luke 6:45. You ever been in a situation where all of a sudden you just popped off at somebody and it's like you're standing beside yourself, looking at yourself going, why the heck did you say that? You know, it's because, well, the mouth speaks what the heart is full of. So you've got an issue you need to deal with. It's not the surly clerk on the other side of the counter. We fight not against flesh and blood, but against principalities and powers in the heavenly realm. Always remember that. Do you think of yourself as a person who has faith in God? Do your thoughts and words reflect that? We can decide ourselves into thinking we have great faith. But if challenges easily defeat us, then maybe our faith isn't as great as we thought it was. Jesus said in Luke 6:45, the mouth speaks what the heart's full of. So, it's pretty obvious what we got to do here, right? We got to change. We don't want to try to change what comes out of our mouth. If we change what our heart's full of, that will automatically change the words that come out of our mouth. You can learn a lot about yourself by listening to what you say. Do your thoughts and words show your dependence on God? Recognizing that His abilities, not yours, enable you to do anything you need to do. To get your words right, you must get your heart right. And to do that, you must line your thinking up with God's Word. That means being willing to face anything He wants to show you and asking Him to change you. Not the other person, not the thing, not the obstacle, not the hurdle, but you. And you're thinking, well, wait a minute, it's not my fault. She said that, or he said that, or they did that. You're the one that needs to be changed. Let that sink in. If you're trusting in your own strength, start trusting God instead. If you're attempting to do things through your own abilities and becoming irritated, let God know that you want Him to work through you and allow His sufficiency to be yours. Paul writes in 2 Corinthians 3:5, not that we are sufficient of ourselves to think of anything as being from ourselves, but our sufficiency is from God. Your words are like containers, so don't fill them with things that disable you. Instead, stand on this scripture. And God is able to bless you abundantly, so that in all things, at all times, having all that you need, you will abound in every good work. 2 Corinthians 9:8. When you speak, always agree with God's Word. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.